I do have some of the numbers. Amazon Web Services net sales were actually slightly beat at $7.7 billion versus the estimate of $7.67 billion. And I find that actually pretty fascinating because we saw Microsoft completely dominate on their actually cloud services. So you would have anticipated that Amazon would have done better.
Let's bring in Christina Partsinevelos because she's got a little more color too. Thank you.
It's because Kevin is going really to the bread and butter of what we want to focus on, the Amazon Web Services. So like he did mention, you're seeing it at $7 billion. There was a larger increase. You did mention the earnings per share came in much stronger than anticipated on the screen at $7.09 versus the estimate that was $4.72. So it's a massive beat. Revenue in line, relatively in line, a little bit higher. So the estimate was $59.65 billion. You're seeing it at $59.7 billion. So there's a beat there. We're seeing some strength in the physical stores too. So these are the numbers I'm getting right now, about $4.3 billion at the moment. So it's a slight increase compared to last year at this time. We're going to get you more numbers though as soon as they come in. They're slowly coming in right now.
Okay, right. Connell, you look like you want to jump in.
In addition to Kevin and Aaron Gibbs who are with us, Aaron Sykes is also here. He's a retail analyst. All right, Kevin, the numbers overall look good. The stock's up about 1%. Now, on the web services number, which is the big one everyone's looking for, how do you look at that compared to, again, the estimate was what, $7.72 billion, right?
The estimate was $7.67 billion, and they got $7.7 billion off of that. So they
that's
slightly
a good number.
beat it.
It's because that's the thing everybody cares about, right?
Yeah, I think that's what everybody cares about because it's what makes their profits grow. So when we saw the actual earnings per share, it can beat so well because it is the high margin business for them. So you want to see them grow and actually beat in the AWS side. Now, this is the side that actually faces the most regulatory scrutiny that we're going to see over the next couple years from actually the major political parties because it is the big behemoth that does have control over the actual mobile internet.
Yeah, and sometimes we get in the weeds with these types of things, point this, point that, but we might be looking at different estimates, which sometimes is the case. We usually use the Refinitiv estimates, as it's called now. The company's changed hands a couple of times. And that was the 7.72, whereas some of the other numbers, whether it's Dow Jones or Bloomberg and others, might have a different estimate. But either way, it's right in that neighborhood. Aaron Sykes, what do you make of what you see, at least so far from Amazon? It's a behemoth. It makes a lot of money. We know that. And the revenue looks to be pretty much overall where we expected it to be. What would your reflections real quick be on this quarter?
Sure. Well, I think that Amazon is finally taking all of these multiple revenue streams, they're separate silos, and being able to combine them for a real scalability. So using Alexa, linking it to Whole Foods, then opening their own grocery store. It's all finally coming together. So we don't see like the big pop right now, but I think coming forward, we're going to.
I think the question also, Aaron Gibbs, going forward for Amazon is, and I saw some people writing about this earlier. It'd be interesting to see maybe on the call if we get more commentary on it. There's been hints that the company will go back to its old ways. In other words, its big spending ways, which was always known for investing in its own business. And sometimes that comes, at the expense of profitability. And I wonder if that'll be what's in the future for Amazon. Does it go back to really spending on its own business, Aaron?
Yeah, I mean, in the past year, they've really cut back, and that's why we see these just insane margins. But they have so much room. They've really got incredibly stable revenue growth. And when you're talking 18% revenue growth over the next 2 years for forecast, you have a lot of room to run, and you can spend a little more and put more money into capital expenditures. Right. And so that's something that we're, not only we'll look in the reports, but also on the earnings call and see if they're going to do that and expand, particularly on the ad revenue side, because that's another high margin, high growth business. Right, because
it would be a change kind of, Kevin, right, over, as Aaron points out, over what we've seen recently from Amazon, which has really been a focus on profitability. And as that number on the screen shows, they're making a lot of money. Yeah,
one of the ways they actually make a lot of money is they're actually just a platform, right? I mean, over 50% of their sales come from third parties on their e-commerce platform, and they actually want to grow from 5% overall retail sales to actually 10%. And so they're doing that by investing in their warehouses and their distribution, the fulfillment centers that they have. We saw UPS actually be down today off of investing in that as well. And I think that's where there's going to be a lot of the concerns about margins. Now, they also implemented a program now where it's like you can have Amazon Delivery Day where they're going to actually try to consolidate shipping and reduce those costs. They're trying to do their own delivery. Well, yeah. Hey, listen. I mean,
it's not good.
Yeah, I'm not saying it does work. I'm just saying they're trying to find ways to actually reduce their costs, even their own delivery services, right?
Yeah.
I mean, think about it. They're buying their own fleet of vans to compete.
That's true.
Yep. So it's a big concern for them.
The stock fluctuating in the after hours was up, then down, now back up again. Christina in the newsroom digging further into the numbers. What do you have?
If I may just start to trail off of what Kevin just said. So you're talking about profit margins, and that's been a concern because sales has started to slow down. So we're seeing net sales for this quarter up 17% compared to last year.
Okay.
That's an up mark, but overall, if you're talking about profit margins, where is the money coming from? Cloud computing and advertising. If we're talking about the cloud computing, that's AWS, the Amazon Web Services. And a little interesting caveat, though, is the biggest customer for Amazon at this moment is Apple. Apple pays to the tune of $30 million per month to get AWS, Amazon's web services, which I think is just an interesting comparison. We're still waiting to see, though, international sales. That's something I'm looking at, too, given the regulations in India. But overall, the margins, sales may be slowing down, still growing, but the margins are remaining pretty fat because of the web services.
It's 4 quarters in a row that they've slowed down, all relative, of course. What's that,
I don't know
Melissa?
if you guys hit the guidance yet. 2019 guidance for operating income is expected to be $2.6 billion to $3.6 billion. And they see second quarter sales at $59.5 billion to $63.5 billion.